The net revenue retention rate came in at 125%, which was really good. The reason why the net revenue retention rate is important is because it measures how much existing customers are spending with Snowflake in their second year of service. So it tells me how good the customer value proposition is that Snowflake is offering its customers. And if you read my book, like thousands of you have, you'll know that the customer value proposition is one of the 6 steps I evaluate when I'm determining if I like a stock or not. It's one of the critically important factors. It tells me how sustainable the company's revenue is, how sustainable its revenue growth is. If existing customers are spending more money with Snowflake, that tells me they really like the value they're getting in return for the money they're spending. And that means that new customers are likely to appreciate the value they're getting as well. So that tells me the opportunity is larger for Snowflake. At 125%, the net revenue retention rate suggests that existing customers in their second year of service are spending 25% more with Snowflake than they did in the first year. So that's a really good sign. And also, I've evaluated Snowflake stock, and it has one of the highest net promoter scores, the NPS score, among any of the companies I'm following. So the customer value proposition, Snowflake scores an A+. So now let's take a closer look at the income statement. For the 3 months that ended July 31st, 2025, Snowflake's revenue increased to $1.144 billion, up from $868 million in the same quarter last year. The operating loss improved. The operating loss came in at $340.2 million. That was an improvement from $355 million negative. Both of them were negative in the same quarter last year. My intrinsic value per share for Snowflake was around $130 a share. Now it's at $153 per share. So there was a roughly 20% improvement in the intrinsic value per share calculation after I evaluated the company's most recent financial results. Still, it's well below the current market price of $239, suggesting that the stock is still overvalued. And this has been a business that's been consistently overvalued. It's a premium business. As I mentioned, A+ in the customer value proposition, A+ in the unit economics, net promoter score, best in class, improving margins, a lot of things working well.
Click the link below to watch the full video.